friends. This is a video regarding my daily trading calls. How you actually need to trade, when to buy, when to exit, what kind of stop loss you need to put. Okay. So now, for example, you can see here I have written buy above 1,000 rupees. Okay. So now this is a rate. For example, this black line. What you can see is 1,000 mark. Okay. So you can see here example one. Okay. The counter was trading below, and you can see the rate just closed above 1,000. Okay, you can make this as mine is I follow 15-minute time frame. Okay, so all this a 15-minute time frame. Why I choose 15 minutes? Because there is so many logics behind it. Why we choose 15 minutes? Why I choose basically 15 minutes? Okay, we can use 5 minutes, 10 minutes also, depending on their what to say, the style of trading. If you are a scalper, people use even one minute, or also even 2 minutes, 3 minutes, whatever. That all depends on your trading style. So, but I have seen so many parameters, and I have decided to go with 15 minutes time frame. Okay, and I usually take 2 to 3 trades in a day, not like a scalper where I do maybe 10 or 20 trades in a day. I'm not that aggressive enough right now. I just take 2 or 3 trades when I get a proper setup. Okay, so now coming to a proper setup, what is the proper setup according to me? Okay, so when I tell you to buy above 1,000, the rate is running here. Okay, and right now you can see in this point. Okay, at this point, okay, you can see here it has just closed above 1,000. Okay, so what you have to do is the next candle, whenever it breaks this high, okay, maybe this can be 1,001 or 1,002. Okay, take a trade and keep this stop loss as 990. Okay, and you can my target might be 1,020 or 1,030, whatever it is. Okay, so then take a trade. So for example, now maybe for next candle it came up to, for example, it came till yeah, for example, it came okay. Okay, now for example, it came till 1,015 now. Okay, so when it comes to 1,015, you can always modify your stop loss from 990 to maybe to the cost to cost, or maybe at 1,005, depending on your risk appetite. Okay, always when you're doing in futures, basically you need to be very quick when you're getting very good returns. Okay, so now coming to the example two, where many people are confused when to take a trade. Okay, so when I tell you to wait for 15 minutes time frame, okay, the next candle it zooms up till 1,010. Okay, and if the target is 1,015, only 5 points left for a trade, or maybe for the second target it is much on the higher side. So now here what you have to do is always, okay, now you know from 1,010 if you're buying, okay, 1,010 to 990, it is a 20 rupees stop loss. Okay, so you need to decide for yourself, should I go for buying or not, depending on your risk appetite. So when I tell buy above 1,000, you can always wait for a retracement. For example, the next candle, okay, it can open like this. After that, again next candle can come here, okay, and again next candle can start going up. Okay, next candle can start going up. Okay, so in this between, if this both are a red candle, okay, if this both are a red candle, okay, say if both are red candle, if this both are a red candle, then wait for one blue candle or a green candle, okay, to close above this. Okay, then you can take a trade, or else always you can wait for a retracement coming here. So again I would like to tell you again, if in case this candle, okay, instead of this candle it breaks here, for example, it breaks before a green candle. Okay, we'll ignore this candle. uh, Okay. See, for example, now uh, the market is sliding downtrend. Okay. See, now it went for next candle 1010. Okay, you need to buy always above this 1010 if you want to buy. Okay, even though I told you to buy at 1000, you can take a decision of buying above 1010. But depending on your risk appetite, if you feel that risk is on much on the higher side, then don't take a trade. You will get any other call, you can wait for those calls. Okay. But if you are waiting, you are getting a red candle here, red candle here, red candle here, and the red candle closing was done here at this lower level. Okay, don't take a trade here because it is going down. Okay, so wait for another retracement. When it comes and closes above here, below 1000, then you take a trade always. Because when it comes here, if in case, as I told you at the previous example, if you find one green candle here, again you can buy here at 1005 also, not a problem. Okay, but if it is continuously making a red candle, okay, then don't go for a buy. Wait for a green candle. If again the green candle is done here, don't go for a trade. Okay, it has to close above this 1000. Okay, this is the way you need to take a trade. So that again all depends on your capital. Okay, so when you, if you have a more than 5 lakhs or 10 lakhs capital, you can take a trade above this. Again, if it comes and closes here again at this level, again you can take a trade. Okay, because this is on the overall trend. Because when you check the overall trend, it is on the bullish side here. Okay, so any retracement which you need to take a trade. Okay, and coming to the stop loss also, if you have seen my yesterday's M&M trade, okay, entire data, okay, which I was following was showing a positive trend. Even auto sector was positive, as I was telling, even Maruti was giving a day's high. Okay, and we can see here with the data that there are buyers are waiting at the lower levels. Okay, buyers are waiting at the lower levels. Hold on a second, I'm just getting a call. Okay, so yeah, because the trend is on the upside, and whatever the data which I see, when the delta is increasing, when the buyers are already there, so what they do is they don't give us the easy money. Okay, what they do is they hunt for the stop loss before going for a day side. So that's what happened in Mahindra and Mahindra. If you check, okay, it was coming to the day's low. It was hitting most people's stop loss, and you see at the last 15 or 20 minutes, it went and closed at the day side. Okay, so when you are confident with your data, so, okay, more than any other indicators like it can be MACD, stock, RSI, or whatever it is. Okay, everything is dependent on open interest. Okay, follow the open interest. I'm not saying you have to follow me only for that. Follow anyone's strategies where open interest is highly used, because open interest is the data which gives you the real data. Okay, depending on the OI data, you can always take a trade. Okay, so this is basically, again, I just want to tell you in brief very quickly. If you see the close is just, it has closed above this 1000, okay, immediately buy and go for a target with stop loss. Okay, again, stop loss also, it should be on the closing basis. Okay, and it's not like a kiss trade. Sometimes what will happen is, the when you put the stop loss of 990, what they'll do is it will come like this, and it will create a wick like this. It will create a big wick like this. Okay, but the close will be above 990. This is all hunting of stop loss. Okay, so always you have to wait for 15 minutes candle where the close is below this 990. Okay, and below this, okay, I repeat, even for the stop loss. Okay, even for the stop loss, see, this should be the below this should be your stop loss. I said 990 is the stop loss. Even if this is 988, then you have to keep the stop loss below 988. This is the actual procedure of stop loss. But if this 2 rupees will cost you uh, like 2000 rupees, you don't want to take that risk. That is a fear stop loss which you are maintaining basically. Okay, so what you have to do basically is always wait for the close and you see the result. What I'm trying to tell you is practice this, because I'm talking from a 15 years of experience, what we see, what we have noticed, everything. Okay, follow this process. When I tell you about buying above And also, and I'm telling to keep the stop loss below 990 with a 15 minutes time frame close. Okay. So as I told you, within this 15 minutes, if this there is a big you can see the big raise here. If there is a big downside here, I'm sure you are going to lose money. Okay, but that is the part and parcel of trading, wherein you have to wait patiently that whether this stop loss is going to sustain or not. Because when the trend is up, they'll hit the stop loss, and end of the day they will take it up. So you either have to buy more quantity here, okay, if you have funds, or else wait for the close. If you don't want to take that risk, then okay. If you are decided that my loss I'm going to book at 3,000 or 4,000 rupees, then you need to book the stop loss here in futures. And if you're trading in cash market, what you have to do is, for example, if you have the capacity of buying 200 quantities, in this place you can buy, if you have 150 quantity, 50 you can keep it for a averaging or something like that. Okay, if in case in the example 2, if you are buying, if you have a capacity of buying 200, you just buy 50 year or 100 year. Okay, so that whenever there is a downfall like this, okay, you can start buying. You have to buy, as I told you, only when there is a green candle. Okay, when there is a close in the green candle, not if it is just sliding down. Till it slides down, just don't enter at all. Okay, you have to just hold on to, again when it closes higher here, you can take a trade. Okay, so the stop loss always you have to maintain, but stop loss with 15 minutes closing basis, even for the target as well as even for the buy entry. Okay, so this is just a brief what I told you. Maybe in the next I will show you on the live charts. Okay, this was always wait. See, I don't know whether I can draw it here. See that it keeps on going like this. It will come like this. It will come like this. Okay, so when it comes and closes here at this point, okay, when whatever it goes up, it will come down. It will take a retrace. Okay, for example, now it went up, came down here, is going down, and again it formed a green candle, for example, at this place. Okay, buy above this, buy above this. Okay, so then you can see, maybe you can, for small traders, can this you can keep as a stop loss. Okay, then it come here always to hunt the stop loss. So what you have to do is, that's what I told you. In Bank Nifty, keep around 20 to 22 rupees as a buffer. For example, if I tell in Bank Nifty, for example, if in Bank Nifty is trading at 41,000, okay, always keep the stop loss in Bank Nifty. Like if I say stop loss is 41,000, keep the stop loss as uh, 40,976, those levels, maybe 20 to 24 points buffer which you need to keep always from the stop loss levels. Okay, and for bank and for Nifty, you can keep it around 10 or 12 points because it's almost double. Okay, you can keep that. So always don't put the stop loss and keep, because they will come and hunt it. So what you have to do is always wait for the close. Okay, and also there are not only wait for the close. If the parameters, there are so many other parameters which you need to check in, which obviously we will teach you in the later stages. But just for this is just a video on how to take a trade and how to place a stop loss. Okay, this is just, it's not like the entire course, like wherein you will know the, you will understand the entire concept. Okay, there's not only this trend lines or OI data. We see so many other parameters also before taking a trade. We see the uh, we see the price action, we see the volumes. There are so many other steps which we need to take before taking up any decision, even for the stop loss. So if in case we know this market is getting weaker, we don't even have to wait till the stop loss. We can always exit at the cost to cost or whatever it is. Okay, so if any doubt on this video, kindly message my team. We'll surely happy to assist you once more on this. Okay, thank you once again. Bye.